Welcome to today's market sitrep. Matthew Buckley, call sign Whiz, the chief options strategist at T3 Live, coming to you actually from the heart of the options trading world up here in Chicago. Crazy day in the market, folks. But before we get into our sitrep, make sure you go to t3live.com/live-event. I misspoke yesterday, so that's a free round of beers on me. Next time I bump into you, the Laz's live training event is actually October 15th, so that's tomorrow, and we have two sessions, 4:30 and 9. So go ahead and pick your time, register, and do some free stock training with Laz. But kind of a whipsaw, shocker, day in the market today. Dow was up as high as 70, saw a higher print than that. The S&P was doing great. Now we're kind of pulling back and walling around a little bit. Saw some JP Morgan earnings and some other stuff going on, but the market is starting to get really spooked, folks. The head of the Wall Street Journal here, the World Health Organization says Ebola outbreak is killing 70% of the people that contract it. They're looking at 10,000 cases. This thing's starting to spin out of control here, folks. And the one thing the market does not like is uncertainty. So that's kind of an external, uncontrollable threat to the market that we have to deal with. But this is what's really funny. The San Francisco Fed head, this guy he actually said, hey, if we really get a sustained disinflationary forecast, then I think moving back to additional asset purchases in a situation like that should be something we seriously consider. Translation, QE4. So the countdown to QE4 has begun. This is what happens when a stock market becomes addicted on the crack of a central bank. Bad. So they kind of soothe us with, well, if it gets really bad, maybe we'll jump in again. That's bad, folks. Okay? This is like, the Pope telling Catholics that hell doesn't exist. Party on, Wayne. That's not good, folks. So I've been predicting these future Fed meetings would be guess the interest rate rise, when that's going to happen. Now this Fed head throws out the, hey, we'll always be here. Everybody gets a trophy. That's bad, folks. But the Fed it concluded its latest POMO, permanent open market operations. Just about 6 more of them left. And as you can tell, the crack addict, look what's going on when these guys, once they get done. So once they start withdrawing the crack, so to speak, this is what starts happening, guys. And we're going to see a lot more of this. Okay, and exactly. So when is the Fed hiking rates again? Well, if they're looking at this market and saying, wow, and anytime we pull some love out of this, we implode, this is about to get interesting. Really funny with the JP Morgan earnings release. Whoops, about 3 hours early. Right, quarterly results leaked out 3 hours before their investors they were supposed to release earnings. So ain't the first time, right? Citigroup, Google, MetLife, Microsoft, NetApp, Disney. I mean, it's happened a lot before. So it was very interesting to see JP Morgan's. But we're seeing a lot of financials this week, folks. Remember, financials and transports tend to lead us into and out of good and bad. Okay, and if the financials are rolling over, we're not seeing a lot of good. Flight schedule today, small business index absolutely imploded. 96.1 last time, looking for an increase in small business confidence, and it imploded. Not a good sign. We're going to get some inflation numbers out of China tonight. I'm going to be watching those. They could ripple across the Pacific. Tomorrow, we're going to get some macroeconomic data that's going to move our market around here. Core retail sales, and obviously whenever you see the word core, that means X something. In this case, it's X autos. So core retail sales and obviously regular retail sales, we'll get some inflation data as well. And then the Empire State Manufacturing Index. And oh, by the way, this could be a huge grenade in the market as well. Mario Draghi. What's he doing? Is he keeping the crack going, or is he going to try and pull people off? We'll also get the beige book, the Fed's beige book. So big day in the market. Tomorrow, Thursday, obviously weekly unemployment claims, and we'll get the Philly Fed and the Housing Market Index, NAHB. And then Friday, we're going to get a good look into housing starts and building permits. So seeing a little bit of housing news leaking out this week, and I think the housing market's rolling over here, folks. Down in South Florida, it is at a fever pitch. And every real estate professional I talk to is like, it's about over with. So when you know that those are my canaries in the coal mine, my buddies that I speak to down there, they're like, Whiz, we can't keep anything in stock, but we know it is getting ready to implode. We can feel it. There's a storm a-coming. Okay? So again, good stuff kind of going on in our model portfolios on a day like today. This is what I should see. Some bright greens, some light greens, some pinks, and some reds. And the biggest red in this portfolio is one of my hedges. So on a day like today, when the market's up, my hedges should be red. Okay? Past couple days, this trade has been up incredibly high, this SDS bullish double vertical spread. So these are my bilge pumps, and on a day like today, I want to see some reds because that lets me know I have a hedge portfolio. Okay? Again, make sure you go to t3live.com/live-event to hang out with Laz tomorrow at 4:30 and 9. I'll certainly be there. The guy's a 500-pound head, and I learn a lot from him. Okay? Got to run. Enjoying being up here in Chicago. Love being back in my own stomping grounds, but I'll be back in South Florida tonight, and I'll be coming to you tomorrow with tomorrow's sit rep from down home. Okay? Happy hunting. Make sure you hedge, and I'll talk to you guys later. We'll see you.